Now, the Altron FinTech Household Resilience Index shows significant financial challenges for South African households attributed to the strict monetary policy of the South African Reserve Bank. The indicator, reflecting the ratio between household disposable income and debt cost, signals considerable financial strain, particularly for lower income households. The impact on consumers in December is still under assessment, but the first quarter of 2024 is expected to pose ongoing challenges. Joining us to take us through the AFHRI print in greater detail is independent analyst Roelof Botha. Roelof, always a pleasure and a good afternoon to you.
Thank you.
Let's talk about the index, maybe a snapshot of where we're sitting currently, and maybe even giving us more insights, Roelof, into that ratio between household disposable income and household debt costs.
Yes, the Altron FinTech Household Resilience Index has become a fairly valuable tool to assess whether households are in a position to actually apply and obtain some form of credit. And I don't have to tell the viewers that it's been pretty tough since the Reserve Bank started with its hawkish monetary policy. I get the impression they must have seen a movie with hawks in it. You know, these predatory birds, and they like the term hawkish because there's no sign of demand inflation in the economy, and yet they refuse to lower interest rates, which the economy desperately needs. And the indicator that really pulled down the Altron FinTech Index in the last 2 years is exactly the higher interest rates, which has led to higher debt costs. So the ratio between household income and their debt costs has obviously declined. If you look at the reciprocal, debt costs as a percentage of household income now is virtually the same as it was in the second quarter of 2020, the COVID quarter. That is a point of huge concern because essentially it's not necessary. This is like a self-inflicted pandemic, to put it in that way.
I must also ask you, Roelof, what we know is that since 2014, the average annual improvement in the index is less than 1%. And of course, then we must look at what's been happening over maybe the last 10 years or so, with maybe isolating the interest rate issue, because that's maybe been over the last 18 months or so. It means also that over a 10-year period, with lower interest rates, something hasn't been quite right in our economy, and that the resilience of the South African consumer and the South African household has maybe moved sideways for some, and for many deteriorated.
Yes, one must make the point that in a country like South Africa, it's a developed economy, it's unfortunately far removed from the lucrative consumer markets of the world, which are in Europe and in North America. So it costs us a hell of a lot of money to get our products there. It costs people a lot of money to come and visit us, but they do, and hopefully more of them will come. But it's interesting, we specifically chose the first quarter of 2014 because it provides us with a very interesting decade in this country's history. It was shortly after 2014, South Africans became aware of what Mr. Zuma and his cohorts were doing to us with state capture. And you can read the gory detail in the Zondo Commission report. Business confidence slumped, and it was a bad period for the economy. Also, Jill Marcus, the previous governor of the Reserve Bank, retired, unfortunately. And we saw within a couple of quarters a doubling, 100% increase in the real interest rate in this country, which is not good for the economy, and it's not good for national treasuries and for SARS's revenue collections, quite frankly. And then came COVID. And then after COVID, of course, there was the recovery phase, there was a change of government, but our current president inherited an administration that of which the senior echelons were appointed by the state capturers. And you can't just fire these people overnight. I wish we could. But anyway, so some of them are still around. And I don't have to tell anybody, what happened to our country's infrastructure. But now it's a rebuilding phase, and I'm convinced that we will see better times ahead quite soon. But lower interest rates, that is the trigger that we need to get this economy back to 3-4% growth. We can do it.
And just speaking to households, Roelof, I must ask you about, the links between a consumer or household confidence and business confidence. Is there a direct link here? Is it possible that if we see an improvement in the business environment and in businesses' sentiments towards the economy, that will, eventually have an impact on consumer confidence and even the resilience of the household?
Yes, absolutely, but one must be careful not to generalize too much because it depends on the sectors of the economy. So, for instance, when times are tough right now, as they are right now, we can see that also in the numbers of new passenger vehicles being sold in South Africa. It took a dip last year, but I can almost guarantee you that basic foodstuffs, spending on basic foodstuffs increased. You can also see it from the latest retail figures, which in fact were published this week. So it depends on the sector. Your business people are smart enough, depending on their product or service, to watch especially retail and wholesale figures. Now, the wholesale sector in this country has a turnover, a quarterly turnover of very close to 1 trillion rand. It is a huge, huge sector. And if one analyzes the different wholesale groups in there, I'm convinced business leaders in various sectors, they will have a good look at that. And the good news is that the wholesale sales are doing excellently, quite frankly, but not all sectors. Durable goods, when interest rates are high, they take a knock. You can see it in the property market. What is of huge concern is that the number of applications for new mortgage loans, for home loans, has declined dramatically ever since the Reserve Bank started its overly restrictive monetary policy.
Before I let you go, Roelof, we don't have much time left. I must then ask you, this of course is for the third quarter of 2023. We don't quite have the data yet for the fourth quarter of 2023, but I'm wondering if we're expecting a very similar trend, depressed households here where the resilience is waning.
No, in fact, we are expecting a bad index at Altron FinTech for the first quarter of 2024. But the last quarter of each year is usually a bumper quarter. You have Black Friday, you've got Cyber Monday, and you've got Christmas shopping and holiday spending. And we had lower fuel prices, which is great news. We had slightly lower inflation. So we're in fact expecting the index, the Altron FinTech index, to pick up in December. Also, very importantly, a lot of people get their bonus checks, 13th checks, etc., in December. So the salaries in the private sector will certainly pick up. The index is calculated on a 4-quarter average basis. So, but despite that, this boom that we expect in the fourth quarter will certainly make it pick up a little bit. But the first quarter of every year is not very good because people are not back in the office on the 2nd of January. Some are not even back on the 2nd of February.
Yeah. Well, we'll be touching base when that comes out. Roelof, thank you so much for your time. It's always a pleasure hearing from you. That was independent analyst Roelof Botha.